Today I'm going to show you an easy way to analyze real estate investment properties using rei-calculator.com. This is a 100% free online calculator that can be used to analyze, save, and compare your rental investment opportunities. In this tutorial, I'm going to take you through a complete analysis from start to finish using a property I found on Zillow.com. To start, go to www.rei-calculator.com. Here you can see the home page. There's an option to sign in and register. It isn't required that you have an account to use the calculator, but it's highly recommended because you'll be able to save the properties to your profile and be able to compare them side by side. I'm already signed in here, so I can just click on Rental Property Calculator at this button or using the drop downs over here. And here you can see a list of some of the recent properties that I analyzed. And this just shows you a summary so you can quickly compare one property to another. You can click on the property name to open up that analysis, or click the plus button on the right side in order to make a copy of that, so that way all of your assumptions transfer over. For this analysis, we'll just start fresh and click New Analysis. Here you can see what the main calculator page looks like. Let me pull this over to show the property that we're going to be analyzing today. This is just one that I found off of Zillow that I thought would be good for this demonstration. So to start off with, we can add a picture of the property. So I already took a screenshot of that picture, or you can save a PNG and just upload it. Next, we can add the property name. I'm going to redact this information so you can't see what the property address is, but I'm just going to copy and paste the address over from the Zillow. Square footage is optional, but this can be used to calculate price per square foot. For the purchase price, this property is listed at 109, but I think the market's kind of hot, so this is probably going to go for a little bit higher, so I'm going to put in 120. Closing costs is the additional cost associated with purchasing a home. So if you hover over each of these, I'll give you a little bit more info. So this says it includes title insurance, attorney's fees, appraisals, loan documents, and so forth. So you can use the default value of 2%, or you could select the drop down here and switch it to dollars. So if I know that this is going to be about $6,000 in closing cost, you can just input it that way. For the loan details up here, this is a rental property, so it's usually a little bit higher than what you get for your personal loan. So I'm going to do 3.5%, which seems to be about right for the time of recording, which is early in 2022. I'm going to do 20% down on a 30-year loan. For rental income, Zillow will actually provide an estimated rental income. So to find that, it's towards the bottom over here, and you can see rental value estimate is $1,069. So I'm going to use that for this analysis. Now, this is definitely something that you're going to want to cross-check with a real estate agent or someone that knows the area well to make sure. But for a first pass analysis, I think this will be fine. And here you can select between monthly and annual rates. Vacancy is the amount that the property will be not occupied, which is usually happens in between tenants. So a 5% vacancy is like a little bit less than a month, so that's a good starting value. Next, we have the expenses section. Zillow and other websites like Redfin will usually provide some kind of estimate for these values. So if you scroll up a little bit over here on Zillow, you'll see that the property tax is about $135 a month. Home insurance, $38. Now for maintenance, you can either use a dollar amount or a percent. So I'm going to use 8% of the rental income, which is a good estimate. So this is going to cover like small repairs that happen. Management fees, I'm going to be outsourcing to a property management company. So 10% of rent is pretty typical. But if you're going to self-manage, you can just set that to 0. And for other expenses, this could be everything else, including utilities. The big one's capital expenditures, which includes things such as replacing the roof every 15, 20 years, replacing the water heater, and other big expenses. So for this property, I'm going to put about 150 here, mostly for CapEx. Finally, you can hit Run Calculator, and it'll process your results. Before we look at this, let's look at the other options. If you're going to be paying cash for the property and not having a loan, just click this Cash Purchase button, and it'll remove all the loan info. In the advanced mode, it just gives you more options to get a little bit more granular with the analysis. You can input things such as bedroom, year built, and so forth. This isn't used in the analysis, but it's useful to have this information handy. On the purchase, now you have the option to input the repair cost. So if you're doing a fix and flip, you can input your repairs and also the after repair value. If you don't put anything into after repair value, we'll just use the purchase price for that info. Next, we have the options to change the various assumptions. Property appreciation is the annual growth of the property value each year. Rent increase is how much the rent will increase. Expense increases is pretty self-explanatory. And inflation is the average inflation rate that is used to calculate the present value of the future earnings. So I'm going to set this to 3.5% because that's about more realistic for current conditions. And then finally, closing cost to sell is the amount that you have to pay for realtor fees and other closing costs when you sell the property. In income, there's an option to add other income, which is if you're renting out the parking space or driveway or anything else. And in expenses, you'll see options for HOA, electricity, and others, so you can just itemize these down a little bit further. So since my 150 here is really CapEx, I'm going to move that over into the CapEx spot. After you input all the details, you can click the Run Calculator button, and it'll process your analysis. At the top here, you'll see KPIs, key performance indicators, which kind of cover the main metrics of your property. So the cash invested is how much money you're going to have to put up to buy this property. IRR stands for internal rate of return, and that's basically what the annualized return of the property is if you sell it after X number of years, so 5 years and 10 years in this case. Monthly income is how much you're getting per month minus the expenses gives you the net operating income, and then you subtract the mortgage from that to get your monthly cash flow. Cash and cash return is the percentage of cash flow divided by the amount of cash invested. At the top here, you can see more details about the property. So if you input a rehab cost, that will show up here. On the top right, you'll see the initial cash investment. So if you did have a after repair value that was higher, you should see some positive initial equity. In this case, it's negative 6,000 because we're spending closing costs to buy this house, which isn't going to equity in the home. In the expenses, you can see itemized expenses per month and annual, along with a pie chart for percentages. For the calculations on income, you have your rental income, you add your other income sources, and then you subtract the vacancy rate to get your gross income. And then for cash flow, we subtract the expenses from the gross income to get our net operating income. And then finally subtract the mortgage to get the cash flow. So this cash flow figure is actually lower than what you're going to be getting each month, and that's because we have a $150 CapEx here. So the CapEx is actually going to be coming in every month, but you're going to want to set this aside for those big expenses that are going to come up every X number of years. So because of that, we don't put in the cash flow figure because it kind of overinflates the real long-term projections of the property. Next in the analysis, you'll see different graphs. The first one is the annual cash flow you'll get from the property each year. There's in future dollars and today's dollars. I recommend that you use the today's dollars value because it's more representative of what the purchasing power of that income is going to be. The next graph is return on investment, or IRR, which is internal rate of return. This shows you what the annualized return of the investment is if you were to sell it after X number of years. I recommend that you look at this in today's dollars. Here you can see it peaks out after about 6 or 7 years. This is usually the optimum time to sell the property because you can then reinvest that equity and appreciation into 2 or more properties. So you're basically leveraging up again. If you hold it for longer, then your IRR usually drops off a little bit because your amount of debt on the property is going down, but it's a little bit safer to keep it longer. So it kind of just depends what your preferences are for risk. And you can see after 30 years, your cash flow has a big spike because the loan's all paid off, so now your income is pure cash flow. Finally, below we have investment profit. Rental properties have profit from a few different sources. The main one is cash flow. So this is the monthly income that's in excess of the expenses that you get each month. That's shown in blue. The next one is equity. So equity is as you pay on the mortgage, you owe less on the house, so you have more equity in that property. So red over here is showing you how much the equity is growing over time. And the final one is appreciation. Appreciation happens as the property increases in value. So when you go to sell it, it's going to be worth more than what you paid for it. So that's shown in green over here. Appreciation can't really be depended on, so make sure your assumptions up top are put correctly. So it's kind of usually seen as icing on the cake. Finally, below you can see tables that summarize and give you actual dollar values for each of these graphs up here. So there's one for cash flow, profit projections, and rate of return projections. The final thing I want to note is that you can use the copy URL over here to be able to send this investment analysis to a friend so they can see it as well. After we input our analysis, we can go back to the comparison and summary page to see how it compares to our other properties. Also, what we can do is make a copy of it over here by pressing the plus button, say copy analysis. And let's say that we want to run another analysis if the rent was $100 higher, so 1169. So maybe we're not exactly sure what the rental income is going to be and we think it might be a little bit higher. You can hit run calculator, you'll crunch that, and then you can return back to the summary tab and you can compare it side by side. You can see how much the cash flow increased per month and what it does to your returns. And last but not least, there's also another calculator called the CapEx calculator, and this can be used to figure out your CapEx for different investment properties. So check that out as well. So that's it for this tutorial. I really hope you enjoyed this calculator, and I look forward to hearing your feedback if you have any suggestions for improvements or future calculators. Thanks for watching.